let's get to it.
All right, thank you, Jay. Just make sure your recording is up, and let me just do that on my own as well.
All right. Let me do that now. Okay. All right. Mine is up. My recording is up, and
All right, perfect. So let's just start with the thing. All right, so yesterday we had a bit of discussion about market structure, liquidity, and liquidity grab versus market structure. We talked about momentum, how to play and how to expect after momentum has shown in the market. We talked about Fibonacci golden ratios and premium discount areas as well, like how where should we get in for buys and where should we get in for sells. Now, before I jump into the sixth, seventh, and eighth part, I just want to have a basic talk regarding trading. Like, definitely we as a traders have a priority to make money in this, field. Like we started trading to have a financial freedom. Definitely, we want to do that. But instead of that, we definitely want to do that. But there are some other things as well which we traders want. Like we can make money from different source of incomes. Like there are several jobs right around the world, and there are several ways of income as well. But what differentiates a trader from other is that like we want to have time freedom as well. Like all right, so we just don't want to stick in the front of screen like 24/7 a day. We don't want to do that. All right, we want to have a specific time in our day where we can analyze our things or analyze the charts and look out for setups and then shut down the laptop or stop your system. All right, so we don't want to stick in front of the system 24 hours a day. So what basically is the solution to that is like we definitely we you all might be addicted to that to this trading, but the thing is that it's not really something we want as a trader. We want freedom of time. So the possible solution for that is to have a trading plan. All right, a proper trading plan will give you signals that which where to enter and at what time do you enter. Like think about a situation, think about a trading plan, like where you have just a specific session. All right, you have a specific rule-based method, like you have a rule-based consequences that you want the market to unfold, and after the market unfolds you execute your trade. Think about that. And the next thing, how about just one pair or two pairs? Or we don't want to get involved in too many pairs. So how about a trading plan? And after we compile our trading plan, how about we backtest that and gain our confidence? Because if if your strategy, if your trading plan is not backtested, you by no means would gain confidence when you are executing on live. All right. So to gain confidence when you're placing your trades on a live account, you really should have uh, confidence in that, and the confidence is gained by doing live testing on demo, or the second solution is demo testing. I mean back testing. All right. So definitely, if you are doing more like a discretionary trading, like there are definitely two types of trading. It's mechanical and it's discretionary trading. So it's really a bit hard to backtest discretionary trading because what you are seeing currently on the live market, it's not something which you can see on the past data. So, but when you compare it to specific rules and stuff like that, it's a bit of mechanical method, and it's really easy to backtest that. All right. So what basically my setup and my trading plan is, it's actually a mechanical rule based system. All right. So we would have fixed fixed rules for markets to unfold. All right. Now after we do that, we would have a fixed rule for placing stop loss. We would have a fixed rule for entry. We would have a fixed rule for taking partials and the final CP as well. So in the setup and in the trading plan, I will explain that. And you might be wondering about the sixth point, which is strong POIs and high time frame bias. So I will leave that sixth part at the end of the trading plan. Like after I explain the setup and trading plan, I will explain the extra confluences. The strong POIs, I actually explained that in the yesterday session because I didn't want it to, but a member asked that, so I had to explain that. So I will explain the high time frame bias, and after I explain the setup and trading plan. So without wasting more of the time in theories and stuff, let's just move to the setup. So I basically have drawn the setup which we would be looking for, our on the market. All right. So I would say that just grab a notepad or something, or maybe a screenshot of what we are writing down. So we would have fixed rules, and as soon as these rules met, we would be taking our trade in the market. All right. So rule number one is an Asian range. All right. So in the previous liquidity section, I explained that there are several types of liquidity: trend line, support, and resistance. Anything which is very obvious, as they explained in the previous webinar, like the auto blocks, which are very much obvious. You don't want to get involved in that. All right. So anything that is obvious, or trend lines, famous patterns, that is liquidity. But in that, I did mention in the previous session that we want to look out for only maybe one or two things in that liquidity. And the main component of that is the Asian range. All right. So we would be waiting for the Asian range to form. We would be waiting for liquidity to induce above and below that Asian range. All right. And yeah, we would be just waiting for that. All right. So this shows that we would not be trading in the Asian range. So out of three sessions, which is London, New York, and Asian session, we have just eradicated the Asian range, Asian session. All right. So we just have two sessions, which is New York and London and New York. All right. So that gives us two sessions in a day. All right. So um, so the rule number one is I'll write, keep writing that. So rule number one is we have to wait for Asian range to form. All right. So that is our rule number one. So as soon as Asian range forms, we basically know that there is liquidity above that and there is liquidity below that. All right. So moving down to the rule number two is a grab of liquidity. All right. So we have discussed liquidity grab versus market structures and liquidity. We have discussed. We know that what is a grab of liquidity and how does the market do that. Like this is a structure break because the price, stayed below that. It didn't immediately came in within the range. But in here, as you can see, we have a clear immediate reaction in the range, back in the range. So we have a liquidity grab. Now, this liquidity grab could be right here, like it could be here and breaking this structure. So it could be anywhere. Like this is a scenario for buy setup, and we could have a similar setup for sell setup. Like, don't worry about that. I have placed several practical images, scenarios in my chart as well. I will go on that. I will explain that as well. But for now, you just have to. I'm just explaining the theoretical based structure, schematic on the chart. So we have the rule number one, we have the Asian range form. Now our rule number two is a liquidity grab of Asian range low maybe, or Asian range high. So in this case, we have a liquidity grab, below this Asian range. We have this and immediate price for the fuel, and it closed within this range. All right. So rule number two is we wait for liquidity grab. All right. So we wait for liquidity gap, which we clearly can see here. Like I have plotted this red line, we have immediate turning back point within the range. All right. So our rule number one and rule number two has been met. Now moving down to rule number three is a structure. All right. So previously discussed in the market structure phase, I explained that, and Jay very in detail form explained you that we don't want to go against the structure. Like it can be a microstructure or macrostructure. It doesn't matter really. All right. In my setup specifically, I will explain the higher time frame bias as well. But for now, you just have to look out for a change of character in here. All right. Like as you can see here, like I haven't considered this as a structure break because I have mentioned in my previous session that this could be a wake breakout or this could be a body close breakout. So if the body is closed below, we can consider this as a breakup structure, but in case of a wick, we have to consider this as the breakup structure. So just to clear things up, I have just placed this as a breakup structure. I haven't placed that as a breakup structure. So the rule number 3 is we want to have a break of structure occur approach. All right, change of character. So we have a pretty much good change of structure right here. Like, uh, you know, uh, as you can see here, like these are almost 5 concepts in Smart Money series. All right. So I explained that all of these 5 concepts because in the previous session you might be wondering like this. These are the basic stuff, but I pretty much know that there are a few members in here which might not have studied smart money concept. That they might be elite wave traders or retail traders. It could be possibly anything right there. So because of these people, I have clearly tried to uh, you know clear the doubts about these 5 concepts because these are the only 5 concepts which we would be using in this specific setup. As I mentioned time to time that we don't want to have a complicated system. The first rule is to become a consistently profitable trader. It doesn't matter if you are plotting hundreds of things in your chart or if you are just trading based off an RSI indicator. It doesn't really matter. The thing is to become profitable. Either it's to YCOG, it's to SMC, it's to just indicator. The goal is to become consistently profitable. So because of these things, I have not went over detailed things. Like you might definitely know that the members who have joined from my channel know that I'm not trading, just simple as this thing. You might see several things marked up in my charts, but I'm not trying to make things complicated for you. The main rule, the main goal is to become profitable. All right. So uh, moving down, we discussed structure. All right. So we had a structure right here. We have a break. So rule number 3 is we want to have a structure sheet. So repeating the rules, we want to wait for a Asian range to form. All right. We want to have a liquidity to grab. All right. We want to have a structure break to the upside in case if we are looking for long setups. All right. Now, you might be wondering like these change of characters or breakup structure, whatever you can say, are really normal in the market. Like you would see these hundreds of time unfolding in the market. All right. So, what makes this one different from the others one? It's just not about the structure break. We have a whole story being built around the structure. We have a liquidity grab. We are seeing several things which makes this structure shape a strong one. All right. So moving down to rule number 4, we discussed about momentum. All right. So if if the bullish momentum is strong, that shows that the bulls are really strong. And definitely, if something is strong, like if a truck is coming in front of you, you just don't want to step in front of that because it would definitely crush you. So if a momentum is strong of something, you just don't want to go against that. All right. So as I said previously, like if the bullish momentum is strong, you should not go against that. All right. So we don't want to go against structure, and here we are going with the structure. All right. Second thing, we don't want to go against momentum, and here we are not going against the momentum. So in liquidity and momentum, I told you that after liquidity grab, we see a momentum. All right. So for us to consider this as a valid liquidity, like maybe you would consider this as a liquidity grab, but what makes this liquidity grab different from this liquidity grab? All right. Like how would we be able to spot a good liquidity grab? Now, as I mentioned previously in the session, after a liquidity grab, the price must show bullish intentions or bearish intentions by showing huge volume in that. All right. So our rule number 4 is we want to have a strong push. All right, a strong momentum wave breaking the structure. We don't want to have something like that. We don't want to have a corrective break. We want to have a strong wave. All right, a strong wave which breaks the structure. And we have a reason, we have the logics behind that, that why this momentum emerged in the market is because we had a liquidity grab right here. All right. So moving down to our rules, let me just plot that. We want the wave bracket which broke structure to be highly momentous. All right. So that's our rule number 4. All right. So repeating the rules: Asian range form, liquidity grab, a change of character, and the change of character, the wave which made the change of character should be a momentous move. All right. So now let me just mark this thing here. All right. So as price, we don't know like if the price has did this thing right here or not. Just consider that the price has just did something before this horizontal line. We haven't seen the price doing something like that in the future, but like just consider this that the price is behind this. Price is right here. All right. So we discussed about Fibonacci. So we would want to place our Fibonacci from this swing low to swing high. All right. So a basic problem is how do we really identify swing high? Like for example, I'm drawing this momentous wave. Like we have this. All right. So we have this. So does this mean that we would draw the Fibonacci right here? No, that definitely doesn't mean. Maybe the price might do this and go further up, alright? So we want to have a decent amount of bearish candles, alright? Like it should come back a bit and make some proper swing high for us to consider that as a swing high. Alright, like there should be some candles right here. The price should have a gap. It should print out some bearish candles right here, so we would consider that as a swing high. All right, so that's some issue which I thought that might be confusing to you. That is how we will be drawing our Fibonacci from swing low to swing high. All right, so uh, rule number 5 is we would wait for swing low or swing high to form, and after its form we would draw the Fibonacci. Okay, so as you can see, alright. So as you can see, like we have our rules plotted, we have our Fibonacci right here. So what are the last, one or two rules we would be waiting for price to do? So as soon as the price, makes the swing high, like it's around here, we draw the Fibonacci. What do we do? So we basically want the price to hit this level 61.8. Like if you want to have a snapshot of the settings of this Fibonacci, you are feel free to snapshot that. So we have our 0, we have 0 0.5, we have 0.618, we have 0.786, and we have 1. Alright, so these are the basic settings. And as I mentioned previously, this region 618 to 786, that is our golden ratio. And we would wait for price to come in here. So as I said, I would be keeping things simple. So what do we do right if the price has made the swing high? We want the price to hit 61.8. All right. So that is our entry. Like nothing, no bullshit. Like we would be looking that this specific setup on 15 minutes. All right, just 15 minutes. Like as I said, I would keep things extremely mechanical and rule based. We have one time frame for a 15 minute. We have specific rules which I have just wrote down, and we will be trading that on maybe one or two. Or if you are like if you want to have more trades, then you can definitely go for three. Do we have a member? All right. All right. So uh, we would want the price to come in here, 61.8. All right. So let me just draw a long position setup. All right. Now the question is, where do we place our stop loss? All right. And definitely, where do we want to hit, make our highest profit? All right. So yeah, the question might arise that where do we take our where do we place our take profit and where do we place our stop loss as well. So I have few mechanical rules for that as well. Let me just write down this sixth one. We wait for price to hit 0.618. Price to hit 0.618, and that is our entry point. All right. So that is our rule number six. Now, talking about stop loss, where do we want to place our stop loss? So, in case of long setup, you have to first place your stop loss at 0.786. All right, you have to first place it. Like this is not our stop loss. This is just you have to place it first right here. The next thing you want to do is you have to take out this measuring tool, and you have to count the number of pips this region is. It's like 33.7. All right, it's 33.7. Like I will just write it down right here, and 3.7 pips. All right, my bad. All right, so let me just go over this thing again. This region, 61.8 to 78.6, the golden ratio. We have to measure this region. All right, so we measure that through this measuring tool. So we have 33.7, 33.7 pips. So the next thing you want to do is hold on a second. The next thing, just a second. All right. So the next thing is you want to divide that by 3. All right. You have to divide that by 3. Like after you measure the pips, the number of pips this zone is of, you have to measure the, you have to divide that by 3. All right. So that is almost 11.2 pips. All right. That is 11.2 pips. So we have our stop loss at 78.6, and we have our additional pips as well. So we would add these 11.2 pips in this stop loss. Like we have 33.7 pips right here. Yes, 33.7, yeah. So 33.7 plus 11.2 makes it to 44.9. So we would shift that to 44.9. 450 is almost 44.9. So that is where we would want to place our stop loss. Now you might be wondering like why I haven't placed my stop loss at this specific level. Like why was the need of doing this thing right here? So basically the thing is that in Fibonacci golden ratios, you might know that this is a common tool. People very much use that. So these levels also get stop hunted like by few pips. All right. So I don't want our beautiful trades to just get hunted by few pips. Or and the next thing is that I have along my experience in backtesting have observed that this level usually just gets stopped by few pips. So just to get safe, we are adding these number of pips as well. All right. So I'll make that in the rules. So we wait for price to descend, that is our entry price. So we would place, we would move our stop loss to 0.786, and afterwards we would measure the pip size, the pips size of golden ratio. All right. After doing that, we divide the number of pips by 3. The answer shall be added to the previous stop loss, which was at 0.786. So I hope this makes sense. Uh, why was there a need of this specific thing right here? And you now know that we have a specific entry at 0.618. We have our stop loss at below this region right here. All right. So the next thing is where we'll be targeting. Now, same thing, extreme rule based. We would be aiming for 1 ratio, 1 to 4 ratio. All right. So our target, our check profit would be around 1 ratio 4. All right. So that's our take profit. Now, through these mechanical rules, you now know that where to get an entry, where to place your stop loss, where to get your take profit as well. Now, the last thing, I guess that's the last thing about this setup, and that is where to take your partials and where to move your SL to break even or stuff like that. So, as soon as price hits 1 ratio 2, you close 50% of your position and you move your SL to break even. All right. So that's our rule number rule number 9. Sorry. So that's our with so that's our take profit. The the last take profit. So, and that is our take profit 1. All right. So as if price was coming like here, it triggered our entry, it goes up, it hits our take profit 1. So at this point, oh gosh, hold on a second, guys. So 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 price came down, it triggered your entry, and hit your take profit 1. So at this rate, you will close your 50% of your trade. Alright, if you have a lot size of 2, then you would close the 1 and you would keep the 1 remaining, and you would move your SL to break even. Now at this point, your trade is risk free and your trade is running for the last take profit. Alright. So we have our 9 rules right here. So if anyone wants to take a screenshot, uh, he can do that. I will make that bigger. Just take your screenshot and then we'll move to sorry, how many people are there? 14. All right, so just take a screenshot of that and then we'll move to practical images of this specific setup as well.
And along the way, those who have questions that we would love to ask, concerning what he just said and what he's currently, teaching you guys, you could easily ask the questions now while, you get ready to answer them. You
Yes.
could use the chat box or unmute your mic.
Uh,
All right. Good evening.
Good
Yeah,
evening,
good evening.
Samuel.
All right. According to my knowledge of Asian rate liquidity, right, I want to ask this question. What if once we have a choke, let's say we are in a bullish market and after price has taken liquidity, we have a choke to the upside. What if the choke to the upside goes as far as clearing the Asian high? Are we still expecting a pullback to take the trade up? Because according to my experience and what I've been taught in the past, I got to know that once price has taken the Asian low liquidity and once it clears the Asian high, probably your target has been reached for the day. So is it I want to just ask the question.
All right, so I got your question. Let's move here. So you basically meant that if this coach right here was above this specific high right here, that's your question. Like
Y-
if that is something.
Yes, yes, that's it. Yeah, exactly.
So mate, uh, I really appreciate your question because I had one rule further and I just missed that. So that thing is like there's a chance that price might liquidate the high as well, and there's a chance that price might close below that. So what we want to look is that is there anything else price like in case of if the price has closed below this Asian range, we clearly do have a target like this Asian high liquidity can drive the price upward. But if in case if price clears the Asian range and then pulls back, then we have to identify is there anything else that can drive the price upward. For example, we had uh, this stuff like right here. All right, so we have this, and this region actually clears this Asian high, right? All right, but if we go above, we also see something like that. We have some equal highs as well. So we have to identify is there something that can still drive the price upward, and if there is something, then we can definitely take this trade. Now, this will be actually clear when it comes to practical scenarios. We'll discuss because, as I said, it's never too much it's never too much fixed. We always have to be a little bit flexible because the markets are always changing, and if we do not get flexible, we would definitely get wrecked. So we do have some rules, but we always have to get a little bit flexible. So I hope that clears your question.
Yes, yes, yes. Thank you very much.
All right. So Sia, please for reiterate, is a stop loss of 50 pips too much? Uh, may the thing is, uh, you can use a different pair like something it definitely what sorry, May, I'm just confused. So, what I want to say, like GBP JPY, like we draw this thing like this on GBP JPY, and GBP JPY is a bit of volatile pair. But what you can do is, if your stop loss is if you think that's too much bigger, then you can switch to Euro USD or any other pair that is low volatility. Maybe that's the answer to your question. But for me, like I don't think that should matter because think that should matter is the amount of risk you are putting in your account like if you have calculated the stop loss price and you have used your forex calculator to calculate the exact amount of stop loss, then I think that shouldn't really matters because I personally don't consider the pips. Obviously for these rules we have to consider this, but for targeting for monthly and weekly stuff, we don't have to do that. We have to look out for risk to reward ratios and how many reward we can get, and that is how you do through the forex calculator or any app like Steno or MyFX book calculator. Through that you can use that, and your risk should be matters. Your stop loss really doesn't matter for me. Any else question?
All right. So sorry. I have one more question before we move to the next stage.
Yeah, sure. Ask.
All right. I want to ask after price has broken structure to the upside, once we have the choke already and price is retracing, what if we have what if we have an inducement within the 61.8 and 78.9? level, are we expecting price to take out the inducement and go into deep premium? Since we should always be flexible about trading.
Um, in here, in this specific rules, I would not consider this. All right, I would not consider that inducement. For me, like the way I interpreted this specific pattern, I along my back testing didn't look out for that thing. I just bit of uh, fixed rules, but sometimes in this, but for specific inducement I really didn't check that thing. Backtesting I didn't really check about that thing, but we'll keep things simple. We just don't want to complicate things, so just ignore that inducement thing. But obviously if you have some extra knowledge and you can put in your this specific pattern, then you can definitely use that as another confidence to your trading.
All right. Thank you.
Okay, so for me to add a contribution to that, could you please repeat the question again? Because I did not really get what you said. So please repeat the question once more.
All right. Okay. Here's what I'm saying. Okay, let's say after price has grabbed liquidity and has cleared Asian low, then price breaks structure to the downside. We have a confirmed choke. And when, let's say, why price is retracing, now our PO high is, according to this rule-based setup, our POI should be within 61.8 and 78.9. So let's say price has an inducement within that range. Can we just ignore that range and look below that for an entry?
Jay, basically he said like if the price is coming right here and it's more like an inducement, like maybe there's a chance that price might do something like this. So maybe he said that if that's something inducement, should we care about that thing? So yeah, I answer about thing, but I wait for your inputs as well. Jay, are you there? I think he is not able to listen us.
On what
All
you're
right.
calling it. Yeah, can you guys hear me?
Yes,
Hello?
yes. Now we can hear
Hello,
you.
can you guys hear me?
Yes, yes, we can hear you.
Okay, sorry about that. I don't know what happened. I was responding, but it was as if nobody was hearing me. So, yeah, I got what you said. And based on Wenner's explanation, yeah, he has practically everything. It's based on your understanding, okay? Based on what you're calling an inducement. Now, I get what you're trying to get in here. Right now, you understand the rules of premium and discount, right? And price does retrace into discount. Okay, let's say premium because you said it took out the Asian high and then broke the range low, right? And then we have an adjustment within the 72 of 68 Fibonacci level. So are you to ignore that or stay trade below it, right? That was a question, right?
Yes, yes.
Okay, so what I would say is this: what's your rules? What's your rule of trading? Are you to see price clear out liquidity and then break structure before you enter? Or are you to expect price to retrace into premium and then give you a momentum shift before you enter? Okay, so it's all basically surrounding your rules and your own approach to the market. We can't tell the market what to do, right? Every single high or every single low presented in the market is an inducement, right? It's there to convince traders to either hold a trade or take out the trade, understanding the law of a weak high or a weak low. So every single high or every single low in the market is presented for a reason. All right, so you can't really tell the market what to do or where to head into. So all you could actually do is based on your rules and your understanding of the market. Now, are you calling an internal high an inducement? When internal high is an inducement, and based on your rules, you're expecting price to clear that high, then give you a change of character, like you said on the lower time frame, and then give you an entry? Or are you expecting price to move into the 82 Fibonacci level, which is stop loss above the 100, which is a strong high, expecting price to reverse from there? So it's all based on your rules and your own understanding of the market, right? So if you want price to retraces back to premium and then clears that liquidity before breaking structure, that's something else. All right. So, and if you're expecting price to just return into premium, oh, okay, can I share my screen? Let me show you something real quick.
Sure, sure.
Hey, Rena, can I? Okay. Okay. So give me a minute. All right. So you guys can see my screen, right?
Yes, we can.
Yes.
Okay. So let's say we have price doing this. Now this is an example of what you said. Now, so let's say this is the Asian wind, right? So this is the Asian high, this is the Asian low, and then price clears out the Asian high, give a little internal range over here, then breaks the Asian low. So let's say this was the official low of the day. So now this was now the break of structure high. If you asked, right? Hello, can you guys hear me?
Yes. Yes. I can hear you.
I think it's net. Oh, he's here again.
Yes. Sorry guys, my network was having issues. I never even knew that I had issues with my network. I was just busy heading out. So you guys can see my screen now, right?
Yes, we can.
Okay, okay. Sorry for the um disconnection. So now this was practically what you asked, right? Price cleared out the Asian high, which is the liquidity, clears out Asian low, which is also liquidity. Presented over here, right? And then price breaks the low of the day,
Um, his internet is really messing up. Jay, your internet is really messing up. Like we can't really understand anything.
yeah, I don't know what's going on here. My network is fine
Uh,
on the
uh,
is it clear now? Can you guys hear me now?
yes. Jay, can you just come on the Telegram for 5 minutes? Like, guys,
Whenever I go to my chat,
uh,
whenever I go to my chat, behave. But when I'm back on it's just hello. Can you guys hear me?
it's still messing up with your voice. We can't really hear you properly.
How about now? Can you guys hear me now?
Yeah, it's good now.
Wow. I don't know. Okay, so how
Jay,
about now? Is
can you
he
excuse me?
is
Like, can you come to Telegram for 5 minutes? Guys, just pardon with me, like 5 minutes.
okay? No problem. But you get give me a minute, okay? Hello everyone. Can you guys hear me now? Someone, if anybody can hear me, please send a message on the chat box, or you could use a microphone so I could know it's fixed.
Yes, yes, I can hear you.
We're perfectly fine, right? Okay, so give me a minute and we'll be back to this. So let's just fix the problem once and for all, okay? So I think it's from the call. So if it's not going to get fixed, we'll probably send a new link so everything will be properly again. But then if it's not, I think we have to change the link. Okay, so just give me a minute. Okay, hopefully the microphone is much better now. But I'm just going to explain this stuff which I was onto before, the whole network stuff started misbehaving. And then when on the backstage, we would be, checking the technical and stuff and see if, we will be able to continue or give a little time to fix up this stuff, then send the link back so we could continue probably after 30 minutes. Okay. So let's just get back to it. If I still get disconnected due to the network, I would have to, change some stuff while when I work on that also. Okay. So how about it now? Can you guys hear me perfectly fine?
Yes, yes, I can.
Okay, so let me just explain what I was into earlier. Sorry for
Yes.
the inconvenience and all. Okay, so basically what I was saying was this: we expect price to retrace back into the Fibonacci levels which Joanna spoke about, and then price to come back down. The question basically was that should we, ignore these internal highs, which the liquidity, right? Am I
Yes,
understood?
yes, yes. That was the exact question.
Yeah, are we to ignore the highs, or are we to expect price to, go back up, clear them before, coming back down, right? So what I would say is this: do you trade based on internal highs, right? Do you trade based on internal highs? No. So hold on, give me a minute, please. When I say he's having an emergency, let me just call him back. I'll be back.
Guys, we have an emergency, so I'll send a new link in like 30 minutes. So I'm really sorry for that, but I have some emergency in the hospital. And really hope you don't mind, guys.
Yeah, please just let's just give him 30 minutes, okay? So we don't mess up with the recording. Or just give him 30 minutes, and when he's back, we'll continue. So the recording and all will be perfect, okay?
All right.
So please, everybody check back in the group in 30 minutes while the new link will be sent. Right, the entire instructions will be sent to the group, and then we could continue. Okay. Sorry for this. Let's just give him 30 minutes.